Hey, good morning. This is Mayor Valensky with Driving Markets. So this week we've got a packed week. We've got retail price inflation out in the US. You've got also producer price inflation, which is manufacturing inflation out in the US. Also, you've got the Fed meeting on Tuesday and Wednesday with interest rate decision on Wednesday evening. Big one, okay? Now, will the Fed raise rates by 25 basis points? Big question. Thursday, you've got the ECB interest rate decision. So you've got a hell of a lot of factors that are going to impact the dollar, equities, even commodities, all happening in 1 week. Let's talk about retail inflation in the US. So retail inflation, headline inflation in the US is expected to come in slightly lower. I want to reduce the camera, that's it. Slightly lower than expected. Okay. So with retail price inflation, you've got hardcore inflation. You've got hardcore inflation, which is running at 17, 18, 19%, right? High hardcore inflation. That's core inflation. Headline inflation is running a lot less. So headline inflation is running in the US, or the official inflation is running at 4.9%, 5%. You can expect that to rise over the coming months if core inflation remains the same. Now, one of the interesting points regarding inflation is that raw materials and commodity prices are falling. In other words, they've fallen back well below to where they were in February 2022 before Russia invaded Ukraine, before the Russia-Ukraine war. What you had there effectively was that commodity prices and oil prices went up dramatically. Now they've come all the way down. However, those commodity prices, or the fall in commodity prices, is not being fed through to the retail sector. What's actually happening is the retail sector or the manufacturing sector, one of them, is taking advantage of further profitization or profit or racketeering or profiteering. What you've got effectively is that the consumer is still paying a high price for goods when really they should be paying a lower price based on the inflation level at manufacturing level, which is the PPI, but it's not being fed through. With core inflation being so hot, there is a threat or worry, concern with the Fed that they're going to continue with rate rises. Now, the markets have moved up since December last year on the back of the view that rates are not going to go up any higher and inflation has peaked. So if inflation has not peaked and rates will go up higher, that will pull out all of the drive in the stock markets, in equity markets, because again, the basis of them going up has been a prospect of lower rates or rates not going up anymore and inflation not rising anymore. If there is any indication that those two factors are wrong and they end up going against market views, then you will see a short-term sell-off in markets. My view is that rates will go up slightly more. Inflation will continue rising, but even if inflation continues rising, the Fed and the central banks will not put up interest rates too much because that will damage the economy. That brings me on to PPI, Wednesday, Producer Price Index. Again, markets expecting a fall in Producer Price Index, and probability is there will be a fall. However, there's also a risk, slight risk, that inflation will go higher at the PPI level. Then you've got the FOMC meeting, odds on favored that they're not going to raise rates as far as the US is concerned. There's only a 30% chance of rates rising in the US. However, I've got a sneaky feeling that rates could rise because they did it with New Zealand, Australia and Canada, where out of the blue they raised rates by 25 basis points, which was totally unexpected. The market did not expect that. So I've got a little sneaky feeling that the US may surprise markets and raise rates by 25%. If they don't do it this time, the probability is they're going to do it again in July. It's not the end of rate rises. Rates are going to continue rising in the US, and they're definitely not going to come down in 2023. So whoever was fantasizing, dreaming, thinking or believing that rates were going to come down in 2023, all the analysts on Wall Street, they've got it wrong. As far as driving markets is concerned, this channel says specifically rates are not going to go down in 2023, maybe in 2024. Again, it all depends on unemployment. We've got slight indicators that unemployment is rising, so that's also a factor. Thursday, you've got ECB. Christine Lagarde is in a difficult position now because the Europeans have gone into recession. It's a official recession, 2 quarters of negative GDP, and that's going to impact the decision or rate decisions as far as the European Central Bank is concerned. So rates will go up on Thursday, probably expected by 25 basis points, very unlikely 50 basis points because the markets will not be able to absorb that. However, there will be further interest rate increases going forward depending on the state of the economy. So the Europeans are very worried about the recession. The recessions in Europe, there is a recession in the US, not official, unofficial recession in the US, and obviously the UK is just scraping officially out of a recession or avoiding a recession. The numbers there are very tiny, 0.01% growth or 0.01% growth, and that is going to obviously change as time goes on because the UK will also go into recession. You can expect a bit of volatility on foreign exchange markets. A massive impact is going to be on the dollar. Obviously this week with PPI, CPI and interest rates and European interest rates, euro is going to be under pressure further because if you're talking about recession, you're talking about low production, and therefore the euro is going to become worth less. Okay, so you can expect the euro dollar to fall to around about the 105 level if you are an FX trader. Bitcoin's interesting, testing the 25,000 level. If it supports there, then it will move back up above 30. If it breaks down, then you talked about 22,000 and then potentially down to 19,000. Those of you who are crypto followers and Bitcoin traders. That's more or less it. You can share, subscribe, comment. I've also written a book on how to start your business. It's on Amazon. You can also follow me on Instagram and on TikTok. I'd like to hear your feedback. Have a good day.